And welcome to this lesson on trend and trend analysis. In this video we're going to discuss what makes a trend, how to identify a trend, and what a trend tells us in terms of patterns and formations and how we can use that to our advantage. The trend is always determined using the larger time frame. Trend lines are used to identify the future trend of the market as well as offer potential support and resistance levels. So just as in horizontal support and resistance levels, you can also get diagonal support and resistance levels, and we use trend lines to identify those levels. As we know, price moves in trends, trends move in waves. The impulse wave moves in the direction of the trend, followed by a counter trend move termed as a correction. So there's a common saying, the trend is your friend until the end. So if the trend is up, we look to go long. If the trend is down, we look to go short. So the first step to identifying a trend is to know where you are in the market. Specific time frames are set for varying time periods. This is specifically important when learning where price targets are. In determining the trend, the market of the following time frames needs to be set. So if you are position trading, you would look on the weekly and the monthly time frame. So you'd want to see 3 years of data. If you're trading on the daily time frame, you want 3 months of data. The hourly time frame, 3 weeks of data, and the 15-minute chart, 3 days, and the 5-minute chart, 3 hours. So as I said, the trend is always determined on the larger time frame, but that doesn't mean you can't trade on a smaller time frame following those trend lines. So, as I mentioned, how to identify a trend? A series of higher highs, higher lows, lower highs. So here we've got a clear downtrend. If we had to go in, we would see lower low, higher low, lower low, higher low, lower low, higher low. If we go over here, we've got an uptrend, higher high, higher low, higher high, higher low, higher high, higher low, higher high. That is to visually see through candlestick formations or candlestick patterns, higher highs and higher lows. The other way is to use moving averages. So the most common ones are the 50, the 100, and the 200. So if price is trading above the 50, we look to go long. If it's trading below the 50, we look to go short. And you can actually see how the moving averages do also act as support and resistance. You can see it was resisted here, then we drop down to below the 50, and you can see how it was resisted at the 20, resisted at the 20, and then when we broke through, they started acting as support. Now, the other way is using trend lines, which is what this video is actually all about. So, you need 2 points to connect to make a trend line. As you can see here, we've got our 2 points. So before last year, sort of November time, we were trading in a clear downtrend with the pound being the weaker currency pair. In November, we broke through that weekly time frame or the weekly trend line, and we've now shifted that momentum from bearish to bullish. So now you can actually see the series of higher highs, higher lows. We broke through, and now we've carried on with momentum. If we go into a daily time frame, we can see a clear uptrend. Price is trading above the trend line. So now we would look to go long in these positions. But if you go into a 4-hour or an hourly time frame, you will see that momentum is now in a different sentiment, and we're actually going to look to go short. So depending on what time frame you're trading on, obviously the bigger the time frame, the more prevalent the trend. So always just be mindful of that. So within your trend lines, you get support and resistance. So as you can see here, we have this trend line, we're supported. We can have, the market moves in patterns and in trends. So here we've got a channel formation, a channel pattern. And you can see that we're trading within this channel, or pound USD is trading within the channel. So as a trader, you know that when it comes to this zone over here, we're going to look to enter a short position if we get the right candlestick confirmation. The same as if we get here, we get the right candlestick formation or the right candlestick pattern, we're going to look to go long. So here you can see pound USD is clearly trading in a channel on an uptrend. But if we go on to an hourly or a 4-hour time frame, you can see that with this we are in an expanding flag formation. You can see we've had our impulse moves up, we've now got our flag here, and we know that through Elliott wave analysis it's a five wave impulse. 1, 2, 3, 4, 5. Either we get a break to the downside or we're going to go up to the upside. But considering that the pound USD is in a really bullish momentum at the moment, we would expect price to come back up and then to rally up to the top. So that is how you identify your trend lines. 2 wicks or two points at the top, or if you're coming down from the bottom, you would want 2 from the bottom. This is what we did on the daily. We'll stay on this one actually. If you were going to use these as your point of reference, 1, 2. Although we did use this candle here, this candlestick broke through, we closed above it. So we would still use this initial candle that we had as our marker from there. So that is this video on trends, and we'll see you in the next video.